Matt Comyn, thanks for joining me. We see the latest numbers on falls in lending of new property, both owner-occupied and investors. Biggest monthly fall for May, with new loan commitments down 11.6%. Should we be worried about the property market?
Well, I think it's not unexpected to see that sort of reduction in new activity, remembering that during that period, open for inspections, for example, were closed. There were big disruptions in terms of to the property market. There's been less stock that's come on. You would have also seen as part of those figures a big increase in refinancing activity. A lot of customers switching to fixed rates.
Record increases.
Yes, exactly. And so that some of that refinancing activities offset the reduction in new loan applications. I think on the other side, actually, the housing market's probably, at least to date, been more robust than we would have expected, certainly from what we were seeing or expecting after COVID-19 really started to impact in late March. So I think overall, actually, the housing market has been reasonably robust to date.
Well, to your big announcement this week as chair of the ABA, the extension of these deferrals around loans for both retail and businesses, is it fair to say that for the banks going into this is somewhat easier than coming out?
Well, of course, it's going to be a difficult period for the whole country, and the banks have been very focused in March in creating the broad offer of repayment deferrals, and of course we've seen a number of customers take that up right across all of the financial institutions. We've had the benefit of working closely again with the government and APRA to ensure that there's an orderly transition post-September. And clearly there's going to be very different sets of circumstances for different customer groups. We're seeing that across our customer base, regionally, across different types of industry. Some customers are actually much less impacted than we or they had expected, certainly to date.
And you're encouraging them to pay back?
Yes, absolutely. And we've seen customers who, notwithstanding the fact that they are on a repayment deferral, they've actually continued to make their repayments, in some cases in full, during that period. So I think for many people it's given them flexibility and some confidence to be able to navigate through a highly uncertain time. But clearly we would like as many customers who can to come off repayment deferrals. It's ultimately in their best interest to do so because they'll pay less interest over the life of their loan.
And what about the folk that perhaps could pay back or even pay ahead on their loan, but they think, look, I'm just not sure about what's going to happen in the near term. Perhaps if I kept a little bit of a savings pool instead. Yeah,
we've seen a little bit of both scenarios from people who've continued to make the repayments even during this first 6-month period, and we're in the middle of going through that 3-month check-in process. Some customers being confident enough to just drop out of their repayment deferral. Others wanting to, even though they're continuing to make their repayments, keep the option because there's so much uncertainty. And we're hoping, of course, every week and every month, notwithstanding the events that's happening in Victoria, that the economy is getting stronger, and certainly it has been, and more customers will have the confidence to then restart their repayments.
Because actually, if they were capable of paying it back, it would be cheaper to pay it back earlier, wouldn't it?
Yes, it would, absolutely. And so I think it's in everyone's interest to restart those repayments, and of course we'll support that during this transition period. But for customers who are very severely impacted and directly by COVID-19 beyond September, this support announced across the whole banking industry will help give customers the confidence and reassurance that there will be some options, and their financial institution will be in touch with them to discuss that.
Matt, if the bank for some reason doesn't contact a customer and the customer doesn't contact the bank, then come September, that deferral is not automatic, is it? This is an opt-in situation.
Yeah, exactly. I think unlike the first 6-month deferral program, which was largely available to any customer across the industry who asked for it, this next round will be much more of a case-by-case assessment. And so certainly all of the banks will be working hard. We at the Commonwealth Bank are to make sure we're in touch with all of our customers, and for a number of those just we'll be advising them that their repayment deferral will be coming to an end and their repayments will start on a certain date. But clearly there'll be a lot of contact between financial institutions and their customers between now and the end of September to work through all of those different options.
You and the other banks are also talking about those customers who quite clearly are not going to make it through from your viewpoint as a financier, be they retail customers or businesses. What is your message to them, and just how many are they?
Well, it's too early to tell at this stage, but clearly, of course, we would like to avoid as many of those as possible, as of course our customers would. And we really feel for customers who are in a very difficult situation, and it has been a very challenging and trying time for the whole country. On the back of the start to the year with bushfires, and I've just come out of a visit to the south coast, seeing some of the bushfire affected areas, some challenging times during COVID. I would say, other than in Victoria, most recently it's been less of an impact, mainly because the government, I think, has done a great job suppressing the virus, but also there's been very substantial fiscal support. So we're going to try and get as many customers through the next period as we can. But clearly there's going to be some difficult decisions that will be required, and we're going to work closely with all of our customers on a case-by-case approach.
How secure is our banking system, given that we've got to now actually move through to this second phase, this deferral?
Well, very secure. Fortunately, the Australian banking system entered this crisis in the strongest possible shape, certainly ever on record. We've seen big increases in the level of capital that's been required across the Australian banks, and the major banks have been required to be unquestionably strong. And I think that's really helped. And so I don't think there's any question about the strength of the banking system. Clearly, it's a challenging time for our customers and the Australian economy. And banks effectively are tied to the underlying performance of the Australian economy. And so you've seen in our last quarterly result, we'll have more to say about that at our full year results on the 12th of August, the outlook for increased loan impairments, and just the overall recovery, which is going to take some time.
Just how much of a blow is Victoria? It's costing $1 billion a week, the Treasurer says.
Yeah, look, clearly it's a setback. It's a risk that we all knew right around the country, and we've seen, and Australia continues to dramatically outperform countries globally. But Victoria is a very significant state and economy. It's about 25% of the overall national economy, so clearly going into lockdown for 6 weeks is going to have an impact. It's going to have an impact on all of our business and personal customers, and of course to confidence. But I mean, it's really important that we get the situation under control, and we all collectively do what we can to provide as much certainty and assurance as we can.
So you, as chair of the ABA, must have been pretty central in all this coordination between the banks and the government and the regulators. How important are the other pieces of the puzzle apart from the banks?
Oh, extremely important. I think one of the highlights of what's otherwise been a very difficult context is how constructively companies, including the banks, but certainly in the banking industry, have been able to work together with the appropriate ACCC authorisation, with the government, with APRA, with ASIC, to put packages like this together. And chairing the ABA, as you mentioned, I've seen the commitment of all of the financial institutions, both large and small, not just in the context of getting the original package, but also trying to make sure that we put in place appropriate arrangements post-September to enable as many customers as possible to make an orderly transition.
The Treasurer has now hinted at extending some form of JobKeeper 2.0 income support. Presumably, you'd think that would have to go for the same period of extension as the banking deferral.
Yes, they've had the benefit of doing a review, and we expect that the Treasurer will make an announcement on that later this month. Clearly, we can see the significant support the government's put through. I mean, JobKeeper is approximately $10 billion a month it's costing the federal government. We see about a third of those payments going through to our customers. But you would expect them to continue some form of support. It's obviously very expensive, but so perhaps they're going to look very closely at the qualification criteria and the targeting. And just like the banking industry is really trying to target support to those customers and those citizens who need that support the most.
And what about the government's $15 billion business loan? Now, that wasn't used hugely, it seems to me. I mean, perhaps it's because businesses didn't really want to borrow in the circumstances. Can you see that being used more as we get through recovery?
Yeah, well, we were able to originate about $700 million on the SME loan guarantee scheme, and that was predominantly for customers who wanted to participate in JobKeeper, needed to be able to pay wages, bills. If it was more, I'd describe it as working capital, so relatively small loan sizes, less than $100,000, and that makes sense in the context of that period, particularly in April and May. And I think because there's been so much support, combined with degrees of uncertainty clearly for all businesses, they're really just waiting now to see and get a better read on.
But as things become a bit more nuanced with JobKeeper and we get further along in recovery, you can see it being used a bit more?
I could, and perhaps in more targeted ways. You've seen the government come out and look at packages specifically for sectors like the arts. I could imagine more tailored support, because clearly there will be sectors, education, tourism, travel, which are going to be significantly impacted for some time, versus some of the other areas that we probably expected would be harder hit have actually recovered probably a little bit faster than we'd anticipated.
And Matt, the RBA in all of this, the quantitative easing and indeed that $90 billion term facility, now that wasn't used terribly much either, was it? Was it important?
I think in the full package, the RBA's announcement and what they've done is very important. They've obviously kept rates, they are low and they're going to stay low. They've also influenced directly in the bond market, keeping borrowing costs very low, and they're going to stay that way for many years. I mean, the term funding facility is starting to get drawn upon by all financial institutions and will continue to do so. I mean, one of the reasons why it hasn't been necessary so much to date has been that there's so many deposits and savings. People are holding on to cash. We've seen big increases in deposits right across our customer base, which is consistent with the rest of the world experience, because people are really just holding on to their cash. A lot of the early support from both the government as well as access to super has meant that there's so much liquidity in the banking system. We haven't needed to draw down as much on the term funding facility yet, but the design of the scheme is very good, and I'm sure it will be used well into the future.
So finally, as we all get to the next cliff, which will be sometime after Christmas, what's your message to customers? Are we going to be further along enough to avoid another deferral, do you think?
Well, it remains to be seen, but certainly it's my hope, and I'm sure for everyone, we're hoping the economy is going to continue to recover, and fewer people will need support and assistance. And like you said, I think this at least gets us a bit further than people were expecting. We've hopefully going to be able to create a very orderly transition, get into early calendar 2021, but it's not going to be easy. There's certainly going to be some difficult decisions and choices, and clearly some customers will be really challenged in the months ahead, and I'm sure every bank will work as closely with their customers as they possibly can to support them.
Matt Comyn, always good to talk. Thank you very much.
Thanks very much.